Okay, so guys, welcome to today's presentation focusing on trend lines. From me and the FP Markets team, I want to thank you all for taking the time out of your day to be with us. Given I don't see any chat right now, I assume we can all see the welcome slide and hear me clearly. Guys, if not, please do let me know and our support team will try and assist. Brilliant. Thank you, guys. Excellent. Right, so the plan for this session is to look at trendline studies. This is a beginner's webinar. So trendline studies is a method that's firmly placed under the umbrella of technical analysis. I've seen many traders use trend lines, so I know there's interest in the technique. Hence why we thought a beginner presentation might be a good idea. As I've underlined in previous webinars, every single technical trader at one point in time was brand new to all technical concepts, where everything seemed overwhelming. So please feel free to ask any questions, and I'll try my best to provide some clear answers. For any of us interested in a recording of the presentation, as usual, you can find this either through the FP Markets website or on FPM's YouTube channel. Our support team also send out an email after the webinar ends with instructions on how to view the recording. So as always, before we kick things off, let me just quickly run through the disclaimer on screen. It basically informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. FP Markets do not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. So really then, so what this means is what we discuss in this webinar should not be considered as investment advice. So as investment advice. So moving swiftly on, for those not present in previous webinars, I'll just quickly run over who I am and briefly introduce topics of focus. So my name's Aaron Hill, and I'm proudly a part of the research team here at FP Markets. I've been involved in the financial markets for more than a decade now. So in terms of credentials, I've completed CMT levels 1 and 2 and enrolled on CMT level 3 this year. Now guys, if you're interested in technical analysis, I would highly recommend this course. It's quite a detailed course, and it's quite time intensive, but it really opened my eyes to how broad and diverse technical analysis really is. So I would definitely check that out. Also, I recently received the CFTE qualification in early 2020. So as for trading, I like to keep things simple, as I've said in previous webinars, adopting concepts such as price action, Fibonacci, the relative strength index, and most importantly, chart psychology. And as I highlight in every webinar, please feel free to check out FPM's Trading Hub. It's packed with free educational content and daily analysis using fundamental and technical analysis. So look, as for presentation topics, we're looking at what a trend line is, and it's used for us as traders and investors. In line with explaining what a trend line is, we'll also look at the correct, the textbook approach of applying a trend line. I'll also try to squeeze in some other ways traders use trend lines, albeit not considered textbook approaches. And then, similar to my other presentations, we'll try and combine our knowledge to navigate multiple timeframes. This is commonly referred to as multi-timeframe analysis. Following this, we'll look at taking on any questions you guys may have. Also, please feel free to go ahead and send questions to me and the research team if you feel a question warrants a detailed explanation beyond the scope of this presentation. You can send any questions or requests for future webinars to marketanalyst at fpmarkets.com. I believe the support team will, thanks guys, will place that in the chat box. So without further ado, let's dive into what a trend line is. So guys, can I just ask how many of you have used trend lines in your analysis? I'd assume quite a few, as this is a very this is one of those topics we all tend to learn when we first begin. Yeah, I thought so. Okay. How have you found them, guys? Can I just ask? Have you found that they react well? That they determine the trend? Have you found success incorporating them in your trading strategies? Okay. Excellent. All right, guys. Thank you. So look, a trend line's main purpose, as its name implies, is to define a trend and help identify when a trend may be changing. There's actually a number of ways to determine an uptrend or downtrend aside from the textbook approach that I know of. So other trend lines used are referred to as, good afternoon, thank you, in the Philippines, excellent. So, okay, so look, other trend lines used are referred to as accelerating or decelerating trend lines. This is just a fancy way of labeling a trend line that's steep when a market is in a state of, a speculative bubble, similar to Bitcoin right now, or a market panic. It's a way of following the markets that accelerate or decelerate. But be aware that these trend lines are particularly steep and are prone to snapping. Traders also use, I'm sure many of us are aware that traders also use moving averages. The 200-day simple moving average is a prime example, often used to define trend. Traders also use regression lines. I've not personally used regression studies, so I cannot really comment on their effectiveness. Other examples that I know of using trend lines, of course, are channels. I use these in my analysis quite a lot, both ascending and descending versions. Also, another way is using the Andrews pitchfork measurement, Gann fan lines, and Elliott wave theory. I'm sure some of us here have studied Elliott wave theory. So actually our team are in the process of creating some Elliott wave presentations for anyone that's interested. But I'm not sure if any of you guys have traded or are aware of point and figure charts. We also use trend lines on those. So although I personally do not use P&F charts, I believe through my study that they have to be drawn at 45 degrees. Okay, so look, regular faces here will probably recognize this slide here. It was used in a previous technical analysis presentation. For those who missed it, we simply highlighted the peaks and troughs that form a trend on the charts. Now, guys, let me just be clear here. This is real beginner stuff, so yeah, do take it as such. So this slide displays an upward trend or an uptrend, which occurs when price action produces higher highs and higher lows. So we have higher highs forming across the top of price action and higher lows forming across the bottom of price movement. So let's just quickly spin over to the next part. So look, how we determine a price trend. Most traders use their trusty trend line, right? So as you can see here, a trend line is determining an uptrend, which is always drawn across the lower prices in a rising market. So important points to note here are is that a trend line is considered valid after 2 tests. However, the more tests, the better. Some traders actually prefer 3 tests to validate or confirm a trend line. This is, this is trader dependent, guys. So another important point to keep in mind when applying trend lines is, and this is something I see a hell of a lot of traders actually do not take into consideration, and they label their lines as trend lines when they're not actually trend lines. A trend line should not cut through price action, and it should ideally form from extreme points. Guys, I'll touch on this later as we move to the live charts. The same can be said for a downtrend or downward trend. Only we look at this as a mirror opposite, formed by lower lows and lower highs, which is all the trend line is always drawn across the highest points in a falling market. So look, I'm going to show this right now. So as we can see, the downtrend line is drawn across the highest points in as I said, the falling market. Again, remember, we require at least 2 points of contact before a downward trend, downtrend line, or a trend line resistance, whatever you want to call it, is confirmed. Again, though, some traders prefer 3 points of contact. Guys, do we have any questions before I move on to the charts? No, it's all relatively quiet. Okay, excellent. Okay. So look, guys, next up we have the a dollar CAD chart of the daily time frame, which shows 2 forms of trend lines. The first downtrend line, we can see had 2 points of contact here. This is a relatively nice area for me personally. So the first point of contact is the extreme high here. Second point is around here, but it could have been here as well. This is again trader dependent, how you want to approach this. But then we formed a lower low, and then we rallied up and connected here to form a third point. Now, some traders, we will go over this, but some traders look for selling opportunities at this point here, which, as you can see, would have worked out very nicely. We then continued lower and formed a lower low, and then clinged to this trend line resistance a number of times before eventually breaking to the upside. Now, when we break to the upside, break a trend line resistance, we have a signal, a potential signal that we have a trend reversal. And as you can see, buyers did come in here. So I would say this was a firm breakout, which we saw a period of indecision and then follow through to the upside. Now, although this was a reasonably considerable move, especially as it was on the daily chart, we failed to find acceptance above the I think it's the 134 region before dipping lower and forming the next lower low. Now, with that in mind, we know we still have a downtrend in motion, right? So we can then draw another trend line from the first point of contact, the extreme, from this point here. So now we have another trend line to work with. So we, as price, I would say, grinded lower, we then retested this line here and more recently here. So for me, the dollar CAD is firmly in a downtrend right now. Yeah, so any questions on this chart, guys, please do feel free to fire them across, and I'll try to cover them as best as I can. So the next chart we have is an Aussie dollar chart, again on the daily time frame. As you can see, there were shall we say, a number of false starts on the Aussie in terms of trend line structure, but it seems we eventually settled on this trend line here. So we have the first point of contact here, second point of contact, and then a third point of contact. Now, this would be somewhere I would imagine traders would be looking for long opportunities, and it also combined with an area of possible demand over here to form what many traders label as confluence. So with that being the case, we formed a higher high, but recently we had a trend line break, and if we okay, so sorry guys, I'm just getting a question. Very easy to create too many trend lines when only 2 points equals confusion. I'm not sure what you mean by that, Ivan. Yeah, I'm not sure. Can you maybe clarify what you mean? What do you believe that we should apply 3 points to a trend line? As I said, that some traders do actually do that. They prefer 3 points, but I've found personally through my years on the charts that 2 points is okay. So look, I've found personally that 2 points is enough for me, and then the third point is usually good enough for me to look at either buying or selling opportunities. So as we said, as I was talking on this chart, the Aussie dollar daily time frame, we've recently had a trend line break. Now, this could signal possible, possible weak, buyers maybe stepping aside, right? Or it could, or it could mean a a deeper retracement before buyers, regain consciousness. So look, before I don't really want to go into too much detail on this as I might confuse newer traders, but we have a trend line support here. We now have a break to the downside. Now what happens is a support can actually form a trend line support once broken can actually form a resistance on the retest. Now this is something that I look for in my analysis, and I'll show you on the charts how this works. So look, excuse me. While trend lines are ultimately designed to underline a trend in a market, they can also, as I've already said, be used as support and resistance. I guess you could say, ascending and descending support and resistance. Trendline support and resistance is a particularly impressive method that I've found over my years on the charts on the pound dollar. The pound dollar just seems to react to traditional textbook trend lines, with most reactions allowing the trader to, at least reduce risk to break even. However, it's worth noting that like everything in technical analysis, we all have our own way of doing things, and trend lines are not an exact science. They will fail to hold price, and at times we'll experience some nasty whipsaws with price rallying back in the original direction, which I'm sure we've all experienced. So in addition to textbook stuff, I will also highlight when a trend is breached. As I said, as I recently pointed out, it can actually serve as support and resistance. Now, if it's okay with you guys, 1 second, I have a few questions. Just give me a second, guys. Hello, is it better to use line chart or place trend line on the wick or candles? That's a good question. Yeah, you can use the line chart, but as you know, the line chart focuses on. So look, let me just repeat this question. Hello, is it better to use a line chart or place or the price chart to place trend lines? So for me personally, I would always look at the price chart. I know you can look at the line chart, but the line chart focuses mainly on closing prices. So I always prefer to use the upper shadows and lower shadows to determine my trend lines. But I know of traders that do use closing prices to determine their trend lines. So look, it's how you it's trader dependent, to be honest. As I said, I prefer the upper shadows and lower shadows. Some traders prefer closing prices, which in that case you can use a line chart. Now, if it's okay with you guys, I'm going to, instead of using these slides, I'll spin things over to the charts. Just give me 1 second. Guys, is there any more questions on anything I've covered so far? Please do fire them across and I'll try to cover them in the charts. Just give me 1 second, guys. Okay, so look, guys, can you just please let me know if you can see my charts here, my pound-dollar chart. Just ping across Y or, yeah, all good. Thank you, guys. Thanks, Ross. Thanks, Matthew. Right, so guys, look, so knowing trend lines can both determine a trend and also serve as support and resistance. I'm gonna try and work from the beginning of this chart. From the beginning of this chart. So look, this is I went into a fairly detailed. I went fairly detailed in this. So look, guys, do stop me if you don't understand anything or you disagree with anything. That's fine. You know, please do let me know. So look, I started off from this point here. As you can see, this is a relatively extreme point. There was no point me really starting from this point here because the trend line would have been, you know, too shallow in my opinion and really didn't connect with this price action here. So for me, I started at this point here and focused on this point here. These are the 2 points of contact that I look for. We then whipsawed this area, but it ultimately held. I believe this must have been during news, given the volatility in this move here. So we actually whipsawed this level here. So with this whipsaw, we formed another potential point of contact, right? So from this point here, the extreme, we can now draw another trend line at this point here, which, as you can see, let me just, sorry guys, let me just remove my my cursor. That's better. Okay, yeah, so look, we whipsawed this area here. After whipsawing this area here, we formed another low, right? So with this, we can actually draw another trend line from how I use it. So we're drawing this other trend line. We know that we formed a higher high, breaking this previous higher high here. We come back and this held really nicely. Now this is only the third test. This is what I look for. But let me just confirm with you guys, look, I don't actually just trade. In my analysis, I don't actually highlight just trend line support and resistance. I make sure that the trend lines are actually converging with other technical tools such as support and resistance, supply and demand, RSI overbought, oversold signals. So yeah, look, we held here and then we formed another high. So a trade from this area here would have produced, you know, really quite substantial risk to reward after breaking this higher high here. And we held again here. Look, we bounced higher. This would have been probably enough to reduce risk to break even. So this, as we failed to form higher highs, we then dipped below. Excuse me, guys. We then dipped below this this trend line here, and we formed another trough. So with this trend line now broken, we can now look at drawing possibly another trend line from this point here to this point here, and then after sorry guys, let me just confirm this. So once we broke this high here, we can now look at joining this trend line from this point here, because we now have another higher high which broke this previous higher high. So we come down and look, there was buying interest here. We even formed a, I believe, a hammer pattern, which is considered a bullish signal. But you know, buyers just didn't want to take it higher from here. And actually, this was during the final hours of the US session and very early Asia. So we traditionally do not see much movement during that time. So we had a breach, right? So we breached this trend line support, and we come down, and then we can draw another trend line. But now, look, we're almost creating a fan, right? So look, we can draw another trend line from this point here to this point here. So look, guys, are there any questions? I hope I'm not confusing any newer traders here. As I said, this is a beginner's webinar. Please do fire across any questions regarding this chart. Okay. Oh, thanks, Matt. Brilliant. Thank you. So look, guys, after we drew this trend line here, after we breached this and we drew another line here, we then had a brief reaction here. However, we would have needed to break this high here for this trend line to become active. So look, this is an important. This is something I really wanted to highlight to you guys. So when I conduct market analysis, my main aim is to look for confluence. I don't just look for support and resistance. I don't just look for supply and demand. I look for a cluster of technical tools to merge in one location. You know, if there's more reasons to buy an area, it's more likely an area will hold, or vice versa for a sell zone. So here we have, look, this trend line we recently mentioned here that I just drew previously. After we broke this higher high here, we could then look at this trend line. As I've already said, this is an active trend line. But what was interesting within this area, we also had another trend line support formed here, first point of contact, second point of contact, third point of contact. I told you guys that the pound dollar is absolutely amazing for trend line support and resistance. They really do react so well to these levels, better than any other markets I've looked at. So as I said, we have a trend line support formed here, the old trend line support that was formed back at the extreme there, down below this area, and we also have this area here. Now this is an example of something I would not consider a traditional trend line resistance. The reason being is we've cut through price, so that it's not really defining much of a trend, in my opinion. Some people will disagree, and I've seen many people label these as trend lines. You know, it's just how I've seen this through study, and this is not a traditional trend line. So I would say that this is more of a descending resistance, you could call it, descending support, sorry, after we broke this area. So in this area, we have not only this line here, this descending support, we have a trend line support joining here, and we also have the older version of the trend line here. So look, although the red down trend line was not a textbook, I just wrote some notes here. We also had, yeah, so look, this is just highlighting the confluence. So as you can see, buyers did react to this area, particularly this trend line here and this trend line here. Look, this was a lovely bit of convergence there. Really tight area as well. So look, with that being said, we had a reasonably decent rally from around 29.96 to, you know, highs of 30.70, you know, 30.80. So it's a reasonably decent move. And if for any harmonic traders here, you'll note that we actually formed, I believe, an AB equals near AB equals CD correction. So this would have formed a really nice exit point around this area. Now we also have, while this was going on, we also had price forming a downtrend line here. So we had first point of contact, second point of contact, and a third point of contact here. Look how nicely that reacted to this area here. We dropped back. This I would have thought was news. We spiked it through that. Could have been a stop run. I'm not too sure at this point. But then we continued lower to form another lower low. Now, with that being the case, after we formed the next lower low here, we actually and rallied off this trend line support zone here, this area of confluence. We then reacted to this trend line support, trend line resistance here, and then followed through and gave some downside. So look, guys, I've gone through, as I said, I've drawn up quite a few trend lines on this chart. It's up to you. We can go through each one, but look, there's another one here. As we broke this area, as we broke this trend line resistance here, this signals I'm just going to question 1 second, guys. Which was convenient for you, but in reality, the starting point can be. Edward, can you please go maybe clarify your question? You started your trade. You have started your trade line from a point. Edward, could you just maybe clarify on your question there, and I'll be happy to answer it. Okay, so look, guys, as I said, we broke this trend line resistance here. We've rallied up and we've formed another high here. So with that being the case, we can actually draw this trend line resistance from here, this point, the first point of contact, second point of contact, and a third point of contact. These levels really do react and they really do hold well. And then we come down, we formed another lower low, and we again reacted off of this level, formed another lower low, and reacted again off of this trend line resistance, and then formed another lower low, and eventually we broke to the upside. Now look, guys, Edward, I think this may help answer your. Typically, will they be in a time frame? So, Edward, is your question regarding time frames for trend lines? What do I focus on? The main. So this is for a H1 time frame. Are you asking whether I look at multiple time frames, like the daily, weekly? So look, okay. While you're typing your answer there. Yes. Yeah. So look. So the question is whether I look at multiple time frames. I do look at multiple time frames with all my analysis. I believe if you're buying from a support, for instance, but you don't know there's a daily resistance or a weekly resistance or above, you should know about that, because you're effectively buying into incredibly strong a strong potential sell zone in terms of higher time frames. So look, I love the H1 time frame on the pound dollar, but I would always look at multi-time frame analysis, which I'll touch on in a few minutes. So look, as we've broken up, I don't want to go into too much more detail with this. I think I'm boring you guys with this, but look, here's another point. Another extreme point. So we have the first point of contact here. After we've broken this area here, we can look at maybe joining, maybe drawing some uptrends, right? Trend line supports, right? So we come down, we have the second point of contact here, and we had another point of contact formed there. But after we formed this higher high, breaking up here, we then rebounded from this level here. Again, look, price come up, we bounced off of this, but I think we failed to form another higher high before breaking this trend line support. So look, guys, this is a nice example of when a trend line support actually breaks. So we break the trend line support, we come back and we retest the level. So this in this case is called a trend line support turned resistance. So a retest of this level brought price down to another low. So always do look out for them, guys, especially if they're converging with other technical tools. So, for instance, a resistance to the left here, or a supply zone, or a Fibonacci, whatever you guys use. If these converge with trendline support turn resistance, or trendline resistance turn support, they generally do form a relatively high probability area of support and resistance. So once we've broken this trend line support here, and we formed another higher high, breaking this previous high here, we can then look at potentially drawing another trend line, right? So from this point here, and then we got another reaction out of this point here. Now, look, depending on how you manage your trades, which is incredibly important, you would have potentially made some money out of this bounce from here. But then we breached the area, and what did we do? We retested the we retested the level as resistance. Again, another trend line support turned resistance. And again, look, depending on how you manage your trades, this could have been a potentially nice sell zone. Right, guys, are there any questions about anything I've shown here? Because this is all the same stuff, really. I've just tried to draw up as many examples as I possibly can. If not, I can look at the multi-time frame analysis using trend studies. But it's basically the same as what I did before, but using instead of using support and resistance, I'm using trendline studies. No, I see. Okay, guys, thank you. All right, so let me just quickly go over this one here. So we had, so these are relatively steep trendline supports. Trendline supports drawn here. So from this point here, second point of contact, and we broke, right? So this would have been a clear loss for anyone attempting to sell this area. Sorry, buy this area. Right, so and then we breached this trendline support right here, and we formed another low. So with that, we can draw another trend line, and we had another breach here. So this would have been a particularly poor trading time for most of us. Look, although against the overall trend, this local trend, this trend line here from this point, first point, second point, and third point would have been a reasonably nice sell zone. Okay, I seem to be getting a few questions here. What do you mean by supply and demand? Is that an indicator? No, supply and demand, Gerald, is, I'll show you a quick example. So supply and demand is an area where demand or supply over, let me just quickly draw one on. So this is an area of demand, in my opinion. It's an area that forms a small consolidation where demand, you know, what's the word I'm looking for? Demand, you know, outweighs supply, and we see a strong move to the upside. Now, these are quite detailed. These can considering location, time in the range here. There's a few things, but demand is ultimately a consolidation, a small, tight consolidation, Gerald, and followed through with a strong move to the upside for demand or a strong move to the downside. I'm just looking for a supply area for you. But we also have another demand here, there. And let me just add that demand areas or supply areas are really, from my experience, guys, are best on their first time back. So as you can see, we formed a strong move up, and we didn't. It was a fresh area. It was a fresh area, and we haven't retested it. So we come up, we formed a high, and we come back down, and we tested the demand area here, and again here, and again here. But look, every reaction was getting weaker. So we had a reasonably good indication that this demand was eventually going to break. And then the last final reactions here were pretty minor, consider it in comparison to the previous reaction. So we broke to the downside. Brilliant. Good, Gerald. Excellent. And also, like the trend line supports, and once they break, they can become resistance. Demand, once demand is broke, it can also become supply, and vice versa for a supply area. Okay, guys, I think I've gone over enough of trend lines, but the points. So look, the points to remember are at least 2 points of contact. Some people, some traders prefer 3 points of contact to form a trend line. A trend line's main purpose is to determine a trend. Yeah, so look, guys, if there's any questions about these charts that I've shown, have I marked anything wrong in your opinion? Please do let me know. Oh, okay. When trend, hold on. When a trend line is broken, how can we confirm that it's not a fake out? When a trend line is broken, how can we confirm that it's not a fake out? That's a really good question. So look, I don't know. So for me personally, what I look for in a, if I want to confirm that a breakout is happening, let me just try and find there was a few examples, wasn't there? Where here, right? So for instance, this trend line drawn from this point here, this point of contact, this point of contact, and this point of contact. We had a nice, a reasonably decent rebound from here, but then we broke to the downside in strong fashion. Now this could, of course, this could continue to the upside. We don't know that. So what I look for is a price to retest the area and hold, potentially, possibly even forming a bearish candlestick signal or something like that. That's the only way I know of confirming whether this is a genuine breakout to the downside. If we retest the area and we hold it and show some signs of a bearish intent. But there are other ways that we could also use moving averages as a filter. So if we break through this trend line support and we also break through, say, the 20 period SMA, that could also be another filter. There are a number of filters you can look at to confirm that. But for me personally, I just look at good old price action. I look for, as I said, the trend line break to hold on its retest. If it holds on the retest and starts showing signs of bearish intent, I know that there's a high probability that this was not a fake out and this was actually a genuine trend line break. I have another question. What is the relationship between trading and the trend line? Does one trade before the analysis or after the analysis? Joe, can you possibly clarify your question maybe? I'm not sure I understand. What is the relationship between trading and, so the question is, what is the relationship between trading and the trend line? Does one trade before the analysis or after the analysis? Do you mean, I'm not sure. So Ross, do you look at horizontal lines of support and resistance? Definitely, Ross, 100%. That's the backbone of how I analyze charts. But with, so the question is, do I look at horizontal lines of support and resistance? As I said, 100% I do. But there is a way of support and resistance lines, as I went over in my previous webinar, are not, for me, are not defined price levels. They are areas of support and resistance. So if a support and resistance converges with trend line supports and resistance, this is confluence for me. There's another point I just want to make here, where we touched on the harmonics. I'm not sure if any of you guys are familiar with harmonics here, but there's a trader I know, my mentor actually. This was his bread and butter trade, and he swore by it. He actually told me that this had a 70% accuracy. I never tested it myself because I was too busy knowing everything, you know, as you are when you're oh, this wasn't actually an ABCD. Oh, we could, right, so the ABCD was actually from here, I would have said. So an AB equals CD is just, 1 second, guys, let me just draw this up because this is really good stuff, and it could be something you could test. So look, here we have the blue lines represent an AB equals CD a bearish formation. But when an AB equals CD bearish formation forms into a trend line or a support and resistance, my mentor swore by these. This was actually, in his words, his bread and butter setup. And they do work, but I didn't find they occurred enough. And I'm quite an impatient guy, so I like to see setups every day, which is, you know, patience is one of those things you need in trading. But yeah, so look, we formed an A to B, C, D into trend line resistance. So take a look at these guys, especially on the pound dollar. They do work really nicely, and then you could potentially use the Fibonacci projections. So what I would look for in this area, yeah. So we formed a nice area of resistance, yeah. So we know where to place our stops, just above here. So this gives us some room, right? Because as we know, trading is not exact. We also have whipsaws, we have failures of zones, but with this we have an actual zone around a trend line to focus on. So yeah, guys, do also, just to complicate things further, let me just have a look. Yeah, we had a 61.8% convergence there as well, a Fibonacci retracement. So we had a lot of confluence here, a hell of a lot of confluence. Sorry guys, I've diverged completely here. Let me just check if there's any more question. A close beyond the trend line is a start. Good, very good point, Ivan. Thank you. Yeah, as someone asked about how can we tell if a trend line break is a fake out or a continuation move. Just look for a close beyond the trend line is a good start, but then you can also look at if price retests the area, as I've already gone over. When a sloping trend line meets a horizontal support and resistance line, which would you give priority to? Look, Keith, that's a really good question. When a sloping trend line meets a horizontal support and resistance line, which would you give priority to? Look, Keith, I actually look for really tight convergence. So I look for a really, I'm just trying to find an example for you guys. So if we imagine that this trend line here, I look for this kind of convergence here. I don't look for, let me just see. Right, imagine that, right, just say this, I wouldn't consider this support, even though it is support, but I look for really, really tight convergence where there isn't much leeway. So, you know, when guys that have been doing this for a while, they can look at the chart and they get this feeling about an area. So when you see a real cluster, a real tight cluster of support and resistance converging with trend lines, I don't really give priority to any of them. As long as we have convergence within that area, I then believe that there's a really good chance that price will react. So I look for convergence more than placing priority. But I do actually start with marking up my support and resistance levels, if that helps, Keith. So I look for support and resistance first, then I look for my trend line analysis to converge with that area. But then you can, as I said, as I just showed with this area here, you can also apply, there's so many techniques, as you guys probably already know. You can apply the harmonics, you can apply Fibonacci, you can apply indicators, you can apply, the RSI, the MACD. So it's really just a way of finding you have to find your own way in this and back test what you test the strategy that you're interested in. Okay, so guys, look, I've gone way over time with this. Let me just quickly switch over to multi-time frame analysis. So look, as we know, trend lines can offer support and resistance, and obviously determine the trend. The multi-time frame studies are just one, is another way you can look at the charts. So look, sorry, guys, just 1 second. For any regulars here, present at my last webinars, you may remember I went over my daily analysis, which adopts a multi-time frame approach. Look, guys, it's also, as I just said on the pound dollar H1 charts, trend line support and resistance is just one of the ways you should look at a chart. There are a number of technical concepts, and I would always advise looking for confluence rather than focusing on one individual technical tool. So look, guys, I'm just going to quickly run over this. We have we're again on the monthly the pound dollar chart, and we're on the monthly time frame. We have a clear cut downtrend line resistance here. We actually formed a reaction here, which formed a bearish outside reversal off of this line, but failed to follow through to the downside. We then broke up in December and formed a 2.6% advance, which unsettled this trend line. We've now followed through to the upside in February and printed like a 1.6% rally and formed fresh 2021 highs. Now look, guys, until we test this area here, I think it's 43.77 high in April 2018. From my analysis from Trendline studies, we are bullish for now on the pound. And also, interestingly, on the daily time frame, I won't go into too much detail with this, but we can see we have a few trendline studies going on here. We had the initial one, which broke to the downside, but actually retested the level. Let me just, I hope you guys can see this. we retested this level as resistance and formed another low, which we then drew another trend line support, which you know, as we can see, put through a mild reaction, but then ultimately gave way and has formed resistance ever since. That's quite incredible here. But now we have a nice support, a nice trend line support formed from here all the way up to here. And now, interestingly, we're looking at a possible reaction from this area here in line with the monthly time frame. So the monthly and daily time frames are what I use to gauge the higher time frames, more longer term flow. So as we look to the H4 time frames, as a H4 time frame and H1 time frame, we can see we had a trend line support breach on the H1, but we could possibly drop down to retest a recent trend line resistance turn support here. Now look, guys, as I said, there's also the Dixie. I just wanted to go over now for the Dixie. I'm not sure if any of our newer traders have heard of this, but the Dixie is the US dollar index, and this is currently calculated by factoring in 6 major world currencies, which include the euro, the Japanese yen, the Canadian dollar, the British pound, the Swedish krona, and the Swiss franc. So this is an important index we should all be looking at. So look, we have trendline studies on the monthly scale. We broke up, we formed a trend line here, and we recently breached this trend line support here. So we are dollar bearish on this chart. And also, if you look to the, if you zoom out, we are actually in a really long-term downtrend here. We're actually pulling back. This is a pullback to, which I believe is the 61.8% fib level. Yes, it is. Look at how it's just amazing resistance there. So we form resistance, and this is a pullback, and we could potentially continue lower. This is a technical approach. So I'm not saying we are going right down and forming lower lows. It's just for now, from the monthly time frame, we are particularly bearish in according to the trend studies. Now on the daily time frame, we have a trend line resistance, and we had a mild breach to the upside here, but then we followed through around this point here, and we have continued to make higher highs. So look, we are particularly bullish on this time frame until we maybe even test the underside of this trend line support term resistance. So look, yeah, okay, so that's how I determine, as I said, longer term flow. So on the H4 scale, this is a reasonably steep trend line support, and we've breached this area. So we are reasonably bearish on this scale on the H4 time frame. But interestingly, we've broken out of a trend line resistance here and retested the level beautifully. And we also formed I would say, a half-hearted hammer pattern around this area here and have rallied higher. So look, we are bullish on the reasonably bullish until we retest this the monthly trend line support term resistance on the monthly scale, and we have room to obviously we have room to move higher on the daily and H1 scale. Oh, now guys, let me just spin back over to the slides. I think, yeah, look guys, are there any questions? This is the chance, this is our time. I think I've got to all the questions. Yeah, I think I have. Guys, are there any questions before I look at wrapping things up? I'm sorry if I've confused any newer traders here. I really try to get a lot of information in, so you can walk away with some more knowledge. It doesn't seem like there's any more questions. Oh, there is one. Would you consider trend line studies with support? With supply and demand? Yes, I would, most definitely. As I said throughout this presentation, if a trend line support converges with supply and demand, support and resistance, we have an area of convergence, an area of confluence, which is somewhere I would always look for buyer and seller intent. Would you take a trade based on trend line and price action? 100%, yes. Would you take a trade based on trend line and price action? Yes. Price action. When you refer to price action, are you do you mean candlestick analysis? So Japanese candlesticks, hammers, shooting stars, things like that. If so, yes, people do trade. That's a way of confirming an area, right? Candlestick analysis. But still, I would always look for confluence. I would always look for confluence. So if you have a trend line, as I said, trend line support converging with a demand area, possibly even a support area. This is an area, and if you have additional confirmation from a bullish candlestick, you have a lot of confluence there to potentially take a trade. Yeah. Is there an E certificate? No, I don't believe there is, Jenny. Okay, look, guys. So I think that I've got around to all the questions. So look, guys, I think that's all we have time for today. I think, anyway. Yeah. So look, I sincerely hope. Do you Ross? Hi. Do you use Trendlines intraday? Do you use Trendlines intraday? Yes, I do. What do you consider intraday, Ross? I consider intraday below the H1. So yes, I do. Trendlines on the M5. Look, guys, do yourself a favor. Look at your day trading. Excellent, Ross. Thanks. All right. So look, do yourself a favor. Look at the pound dollar. Maybe today or this evening, wherever you're trading from, and look at the pound dollar and just have a look at the analysis, the trend line studies on that chart. I think you'll be quite surprised. The pound dollar is really reactive to these areas. I don't know why, but they are, as far as I've found. But always, as I said, always look for confluence. Always look for confluence. Whether you're day trading, whether you're swing trading, whether you're position trading, or position trading is investing, in my opinion. But always look for confluence. So yes, the answer to your question, Ross, is yes, I do use trend lines intraday. They're just as handy on the M5, in my opinion. The M5 being the 5-minute chart. I rarely go down to the 1-minute chart. It's just too fast for me. The 5-minute chart is a little too fast for me as well. I prefer the 15-minute chart, the 30-minute chart, and the H1 chart if I'm looking at intraday. But then again, Ross, I would always combine your intraday analysis with some higher time frame analysis. So if you're focusing on the 30-minute time frame, always look for some confluence from the H4 scale or even the daily time frame. Look for converging support and resistance. So look, guys, hope this has been of use, and some newer traders were able to walk away from this presentation more knowledgeable. As always, if there's any suggestions, please feel free to send them over to either support@fpmarkets.com or marketanalyst@fpmarkets.com. Also, do make sure to register for the FP Markets Telegram channel. The sign up tab can be found at the lower left part of the FP Markets website. I have one more question. Okay. Which one is more reliable, trendline support and resistance or horizontal support and resistance? Look, guys, I don't really know how to answer that question, because I don't look at as I said before, I do not look at one individual aspect of technical analysis. I don't just look at support and resistance. I don't just look at trend lines. I don't just look at Fibonacci. I look at areas of confluence, as I described here. This was a perfect area. This is a perfect example of confluence for me. So we had an AB equals CD resistance into trend line resistance. Do remember that, guys. My mentor traded this for years. He's retired now, but he traded this for years, and this was his bread and butter setup. So simply an AB equals CD into a trend line area. Now, for me personally, I used, as I said, the 127.2% and 161.8% fib projections as to create an area of confluence that I can work with. As we know, yes, please teach us Fibonacci. That is in process. We are looking to create some webinars on Fibonacci. All right, so I hope that answers your questions, guys. yeah, so on that note, thank you all so much for taking the time out of your day to be with us. I really hope you took something from it. Yeah, have a great day, and I'll see you all again very soon. Thank you.